Hi. Good evening, friends. My name is Rakesh Rathod, and I'm from Smallcase. First of all, thanks a lot for joining in on this Saturday evening. And today with me, we have one of our very popular managers, Mr. Rakesh Pujara from Compounding Wealth Advisors. And the idea of today's session is to understand where are we in the current state of markets, and if we can get some better clarity and some better sense on the current situations in the market. And in the middle of so many narratives which are being formed in the markets by different people, by different investors. And at the end of the day, we as investors always end up getting confused and doing no action. So the idea here is to pick up brains from Mr. Rakesh Pujara today. So just to introduce Rakesh, again, we have Rakesh Pujara earlier also on our session. Rakesh have been in the markets for last over 25 years now, and he have seen a lot of cycles in the markets. He has developed a lot of proprietary strategies on investing, on trading, and he has been serving a lot of investors, thousands of investors. And it's just that a pleasure that finally small case investors are getting access to Rakesh Pujara's style of investing. And uh, what a great year it has been for Compounding Wealth Advisors. It's been exact a year now. I think just a couple of days back, a day or two back, they
Yesterday, in
celebrated
fact,
their,
yesterday.
yeah,
Yesterday
in
we
fact,
celebrated.
yesterday they celebrated their first anniversary on small case. And with over a century percentage of return, of course, with a disclaimer, past returns are not future returns for sure. But I'm sure there is a whole lot of process which has gone into that achievement of those performance. So today, I would like to have those conversations with Rakesh for the benefit of all our investors. So welcome, Rakesh, and thanks a lot for joining in.
Thanks, Rakesh, for having me. So Rakesh is talking to Rakesh once again.
Yes, so I just
And
call this session always Rakesh calling Rakesh. And it's really a pleasure always talking to you. So great. I'll just get straight to the session today so that there is a lot of detailing and clarity our investors can get today. So as I told you, right, investors are really having a great time. They had a great time till 15 days back, when suddenly there came a standstill, or there was a spoiler in the party kind of thing. And suddenly people started getting edgy. What next? क्या होगा, right? आगे. So lot of different narratives are setting in. Some are like really, really extreme narratives and all that. So idea here is to pick up your brains one by one. So maybe Rakesh, I think you can start with the overall context of the markets, where are we and all that, and then we can have into some pointed questions which we have got from a lot of investors when we floated a Google form before this session. So our investors are always very like participative when it comes to asking questions, and we have got some great questions which I will dwell into.
definitely. So just to give you an overview of where we stand today, I think conversation language has to be English, right? Currently,
We can have a mix of Hindi English both.
no, not an issue. So, barring last 15 days, like there was a party going on. Last 15 days, small cap, mid cap correction has happened. Uh, if you look at the headline indices, Nifty has corrected 3-4%. It's like actually it's not even a correction, right? These are called running correction. It happens, and when a multiple year bull market is happening, 4, 5, 7% kind of 10% kind of correction is very normal. Even if I look at small cap and mid cap chart, like at indices level, 10% correction has happened. Several stocks have corrected 30, 40%. But the rise is also stupendous, right? They have gone 3 times, 4 times, kind of like at index level, 65, 70% return. Even after this correction, I think we are sitting at around 65, 60, 65% of gain. So yeah, anybody who's joined the party late will have definitely a negative feeling about it. But those were there since the beginning of the year. Like 22nd March was the our small case we launched on 22nd March. So even after this correction, they are sitting on a handsome gain. So yeah, of course, there is a corrective mode currently, but I think small caps and mid cap had their kind of a fair share of rise, and it needed to be corrected. There was some amount of uh, over exuberance, and that needed to be corrected. And I think it's happening for good. So whenever such thing happened, plus March came, So March, generally people are busy settling their accounts and all. Leverage is also kind of little bit reduced in March month. So all this collided along with, of course, cautionary advice from regulator, which added fuel to the fire in terms of getting the correction. But in any case, like they were due for correction, and maybe that cautionary advice accentuated little bit more. But I think it is settled now. Last 15 days, now I think we are settling.
Sure. Great. So, Rakesh, I will take the one question which usually in all the webinars or conferences, I always see this question coming at the last of the session just to keep that audience hooked. But I would like to just twist this, and I will ask this question just as a first question, just to take it from the top so that we can get into the levers of the whole thought process, what you have. So the first narrative, which I keep on hearing again, is, and this is not only from the investors, I keep on hearing from a lot of leading fund managers as well in the markets and all that. And I'm sure everybody has a right to go wrong, including us as well, including you, including those. But the narrative which has been now going on is that markets are done with the bull run after 3-4 years of continuous bull run, and 2024 will be the year of consolidation with no or low single digit returns. I just want you to have your perspective that how you see 2024 as a year from the performance point of view, equity point of view.
So I'm not bearish in the market. First of all, I am bullish. Will you see the kind of gain that has happened in 2003? Answer is no. You will not repeat those kind of gain. But low single digit, I don't think so. In headline index, I think we can have 15-20% kind of return. That is what my expectation is, and I'll give the rationale behind it. So I don't follow fundamentals, but suppose you have to put forward a fundamental argument also. A lot of people are putting like there is a froth and there's a bubble. Is there a bubble? Let's understand. Like 2023-24 earnings are around 975 NSE Nifty 50 earnings. You're talking 2021-22 kind of PE. Next year expected earnings are 1140. Next to next earnings are expected around 1310 something kind of. Even you keep that 21-22 kind of Nifty PE constant, then also you're looking at between 25 to 27,000 in next 12 to 15 months. And so when you say 20, 25, 27,000, you are talking 20-25% upside in next 15 months. And that is, you're talking headline index. Certain stock can do really well. They can actually outperform index. So if you're a good stock picker or if you have some process-oriented investment process, then probably you can even outperform that. So I am not bearish at all. Fundamental argument is also there. If you look at the mother market, for example, like mother market, US market and all, Europe is breaking out, US is breaking out, S&P, Dow Jones, Nikkei is scaling all-time high. I think Fed is done with their rate hike cycle. They are pausing. They might start even reversing the cycle at some point during this year. And everything is pointing out towards a kind of a blue sky scenario next year. Election year, of course, there will be results, our election results, US election results. And there is a cyclicality which says, run up to the elections and you gain around 10-15% during election years. So everything is pointing out towards kind of a bullish environment. Whatever froth was there is getting corrected. It has corrected last 15 days. And nowadays, like you don't correct for 3-4 months, 5 months. And the cycles are very short. You correct for 10-15 days and then you resume the bull run. I think the correction has kind of happened. 21,800, wherever it has happened, I think it should hold those levels and it should start building from that block going forward.
So, Rakesh, we were just having a conversation, I think, with you day before yesterday, where we were talking. Usually, when people are bearish on equities and all that, people run to either debt or gold. But we all know that we are already in a very high interest rate environment and it has to ease out over a period of time. And that is where the next big question comes: is gold the next big thing after so many years of consolidation now? Will gold be the trade of the year or next few years? Or will both equities and gold might go hand in hand as well?
So I'm looking at a scenario where equities and gold will go hand in hand. So given or takes few percentage here there, gold long-term breakout has already happened. Dollar index is hovering around 104. It's not going beyond 106. इतना सारा uncertainty हो गया, so much war happened, so much uncertainty happened in the world. Still, it is not crossing 105, 106. So when interest rate is falling, when the dollar is about to weaken, gold does really well. So equities I'm bullish and gold I'm also bullish. That is kind of people get confused. Like ऐसा कैसे हो सकता है? Gold भी बढ़ सकता है और equity भी. Yeah, I look at data, I look at charts, and they are telling me that gold is bullish. Again, metals like silver also might do well, and Nifty fundamental argument pakro, या you take technical argument also. I think before election we'll cross all-time high, and we might add few percentage to that. So gold, yes, I am bullish. Gold, before this conversation, I was just looking at the chart this afternoon just to form the view. I think gold is heading towards $2,700, and it might happen sooner than later. And all this can happen. The only plausible reason why equities will also do well because of the rise of gold, because of weakening in dollar. So when dollar weakens, then probably all asset, all the boats rise. Even crude will rise, even gold will rise, even equity will rise. So again, there is a macro and fundamental argument to why equities and both gold will do well.
Sure. So taking a step back now, again, coming back to equity. So let's get now, we know at least from you that you are super bullish on equities and gold. Now, if one is bullish, definitely he or she would like to play on that kind of environment. So again, we have seen such a huge phenomenal run in small caps, mid caps. Do you think it's time to say hello to large caps all over again now?
I think time has already started. Actually, in our portfolios, we have something called CWA large cap leaders. Okay, so it has outperformed other performing portfolios already. So last 1 month it is outperforming. That means sector rotation is happening. Money is moving from small cap and mid cap to large caps. So that sector rotation is also happening. We have noticed that, and probably since our algorithms are designed based on price, those sector rotation happens on its own. So we don't have to do anything. It happens on its own. So recently, like I was talking to this afternoon also, I was talking to you like the recent buy signals or price action that is happening in large cap, and that is where the breakouts are happening, that is where lifetime highs are happening, and wherever there was a bullish environment so far, वहां पर correction हो रहा है, तो वहां 10-20%, 25% stocks have corrected. So those outperformers of the last year might go into consolidation. They might not fall much, but they might not rise also. So they might go into sideways or maybe sideways to little downwards consolidation, and the sectors and the stocks which were like underperforming, so several market stocks were underperforming, the even headline indexes, so they might start performing. So that sector rotation we are noticing in the data, and anybody who is having a keen eye on the data will notice that sector rotation has already started happening since last 1 month.
Sure. So that brings me to the next question. As a logical progression of the same execution strategy, one has to follow. So, for example, somebody is already having a portfolio which is tilted very heavily towards small cap, mid cap kind of thing. So, one thing is for sure, we all are saying right now that large cap ka rally chalu ho gaya hai. So, what would you advise? Would you advise to shift some proportion of good proportion of that mid cap small cap to large cap, option one, or option two, you will suggest that एक बार आप उसमें से निकल के cash allocation करो and wait for the right time to get into large caps? How would you play out?
I would not recommend the cash allocation at all. I'm not bearish on the markets. So sector rotation might happen. Rally can move from small cap, mid cap to large cap. So higher allocation to large cap is advised, and that is what we are also doing with our investors. We are advising to go heavy on large caps and go little soft on mid cap. And if you are only small cap, mid cap investors, I think you should allocate at least 50% to large caps, and balance 25 can be go to mid cap, and balance 25 can go to small cap. And cash, not at all. Part of your portfolio can be allocated to gold. Yes, it can be allocated to gold. Do we have baskets where we invest in gold? No, we do not have small case where we invest in gold. We are purely equity guys, and uh, we are actually speaking market cap neutral guys. So we don't give much weightage to market cap except for one portfolio where we are only large caps. So we track say NSE 500, NSE 750, and all those, and maybe entire NFC around 1,500 stocks. So wherever there is a traction, price action will happen. We'll automatically go overweight on large cap. So that is how we prefer to play. Even if our hypothesis is suppose nullified, then probably price action will not happen, and then we won't be overweight on the large cap. But I think it has already started happening. Several positions have gone into cash, and that position has started moving to the large caps. So those in our small case portfolios, I think those rotation will happen on its own. We don't have to do anything at all. But I think those who have to do it proactively should allocate more funds towards large cap.
Got it. Got it. So while I was seeing your journey of your small case for last 1 year, I think there was a lot of contribution of you picking up a lot of PSUs at the right time based on your strategy, based on your
Yes.
signals, right? Somewhere I think PSUs also have now taken a pause. Somewhere they had run up. Like I keep hearing a lot of stories that पिछले 10 साल में जितना नहीं चला वो 2 साल में चल गया, 1 साल में चल गया. Specific stocks, of course, not everything, but there have been a lot of euphoria around PSU as a theme, irrespective of the which sectors they operate in. From here on, what you feel now, especially when we have such a big event in the environment, right? The elections and all that, which is directly linked to all the PSUs, plans, strategies, their performances. Of course, a lot of PSUs are independently running a great show, but still at the back of the mind, there's always that election or the government hangover on all the PSUs. So what is your views now going forward? Of course, in PSUs, we have large cap, mid cap, small cap, of course, but that's not the lens I'm looking at. More from the PSU versus private lens as a theme.
So PSU, we cannot paint with the same brush because PSU has a variety of sectors. Like PSU has PSU banks as well. PSU has energy sector as well, and PSU has several other like defense and all that. So I will be sector specific, and there are definitely low hanging fruits have been reaped in PSUs where a lot of inefficiency existed, and there were a lot of low hanging fruits in terms of improving the productivity, in terms of improving the management and the kind of people they are being recruited and all. And election round the corner, I think the current government is very pro PSU kind of government where they believe in running the show profitably and giving the free hand to the professional management and all. So PSU as a theme, I am not per se bearish. Correction, yes, it has happened. It can continue for a couple of more months. But wherever there will be earnings and wherever there is a push of government orders, or like 11 lakh crore budget for infrastructure, for example, similar budget for defense and other areas. Now we have semiconductor budgets and all that. So all this will definitely ensure a constant flow of orders to the PSUs, particularly in defense area. Particularly, PSU banks have been improving their performance in terms of NPS and all. So there are some overvaluation there in PSU banks, and there were some over exuberance in some PSU stocks per se, but we cannot paint the same entire PSU as one basket. There will be selected pockets we will bounce back, where there will be performance will be order back by earnings and all that. So those PSU might scale new highs, but large majority of PSUs where they were just hearsay and they would just rally because PSU was rallying might take a beating. They might not scale new highs from
Got it.
current level.
Got it. So I think you have already answered in parts my next question. I was just about to come that if you can just help us with some interesting themes you are bullish on and why. If you can get into some maybe top 3 themes or maybe any 3 themes which you are super bullish and your own take on that. And maybe then after that, we will get more deeper into your current small cases. I will just open up that page also later. But in the meantime, if you can just help me with some interesting things which are on top of your mind.
So top of my mind, like there are 3 or 4 things that are running in my mind as a larger theme. First theme is China plus one. Okay. So China plus one is underway. It's happening. It's real time. And it's a reality. It's no more a concept. It is actually being implemented on the ground. So even 5-10% of the production shipped from China to India, I think 5 साल 10 साल अपनी फैक्ट्रियां प्रोड्यूस करते करते थक जाएगी इतना you will have that kind of orders, and we have started seeing those kind of orders. So one is China plus one, which is beneficial for manufacturing. Secondly, make in India push by this current government, where electronics, mobiles, and everything is being encouraged, including electric vehicles, have been encouraged to produce locally. Like even Apple have started produce locally. Tesla is coming here. So electric vehicle segment, alternative energies like green energy we are talking. That is one area we are super bullish. Then recent inauguration by Prime Minister of semiconductor units of say Murugappa Group and Tata Group and all that. So I think those are the areas where we'll see next multi-bagger coming from. Defense is one, infrastructure is one. Infrastructure kind of allocation the government is making. I think the one of his speeches he was mentioning, like, you go to any 25 kilometer left, right, center, go ahead, go behind, go to east, go to west, from wherever you are, you will see some project happening. So practically speaking, entire India is under construction currently. And the entire ecosystem, right from cement to labor to construction equipment to the contractors and the companies who is taking the order, outsourcing the order, everything will benefit. So this is a space multi-year kind of we have set a target of say Viksit Bharat by 2047. So infrastructure is one which is going to be around for next 10-20 years, and given the kind of stability that we are seeing in the government, and uh, we are hoping that the current government will continue post-election as well. So there's a continuity of policy. The government is bold to spend on infrastructure and on critical infrastructure like port, roads, rail, even waterways and all. So defense is there, infrastructure is there. Real estate has kind of broken out of the 10 years of shackles, which it was like 2013 and 2020-21 kind of say, where real estate moved nowhere. Now real estate prices have started moving. Per capita is also increasing. Disposable income is increasing. So this will result into kind of purchase of real estate also. So infrastructure, real estate, green energy, we are bullish, and of course China plus one, manufacturing sector we are bullish. So there are lot many varieties of sectors that are bullish, and since we are following only price action based algorithms, I think we'll catch wherever there is an action, we'll catch those actions.
Got it. So I'm just sharing a screen, Rakesh bhai.
Yeah.
So the idea here is you have multiple small cases. Okay.
Yes.
So
I
it will
can't
be,
see. I can't see your screen.
yeah, I'm
Yeah.
just
Yeah. I
sharing.
can see it. Yeah.
Yeah. Can you see the screen now?
Yeah. Yeah. I can see it.
Okay. So the idea of showing the screen is that you have multiple small cases, and I wanted to show the investors also the kind of small cases what you have been running on the platform. And it would
Yeah.
be great if you can throw some maybe one, two, three lines kind of thing on each and every small case, and which small case will be relevant for which kind of investors in terms of the idea is just to align the expectations of the investors and the small
Yeah.
case per se, so that there is no mismatch of the expectation, and returns should not be the only thing based on which people should invest.
Right. So CWA Everest 10 is basically a concentrated portfolio. It is designed for people seeking higher return with higher risk. Why higher risk? Because it is concentrated in 10 stocks. So the moment you're concentrated in 10 stocks, you carry a larger risk. But as you can see, it is the winner of the year. It has generated 89.88% in last 1 year. So that is the winner of the year. But will it be winner of the year going forward? I don't know. The volatility can increase. It can go into sideways to consolidation mode also. The important thing is we are tracking 500 stocks, Nifty 500 stocks. So we are kind of market capitalization neutral guy. We don't have thematic funds. We don't track market capitalization much, in the sense wherever the reaction, we'll go long. But suppose you are looking at a better diversification in terms of number of stocks, then CW all caps 35 is the basket you should look. Again, uh, it has got a decent 79.57% return last year. CW Mill 25 is again a very good quantitative investing momentum basket of 25 stocks. So next one is say momentum multi-cap momentum gladiator. It has got around 20 stocks of it has generated 62%. So multi-cap momentum gladiator, it actually looks at the entire market and looks at the outperformers in that market, and that invest in those outperformers all the time. So those, if that outperformers are large cap, it will go to large cap. If that outperformers are like last year, most of the year they were invested in small caps and mid cap. I think last 15 days, a lot of small caps, mid caps have moved out of the kind of portfolio, and gradually large cap portfolio has started building. Similarly, CW, if somebody really want to kind of diversify more, than say CW Fantastic 50 is the one. It invests in stocks which are scaling 52-week high all the time, and we invest only 2% in particular stock. So by that logic, we'll have maximum 50 stocks in the. We have raised some cash last 15 days, 10, 15, 20% kind of cash has been raised across the portfolio. Not that we took that call, our algorithm that took that call. And the last one is large cap leaders. So people who want to really allocate money only to the large caps, this is the fund where it has generated 36% last year. But I think this year is comparatively it will do better than small caps and mid caps. So these are the 6 funds, and if you count the average of all 6, it is around 65% last year. And uh, anybody wants to contain risk in terms of drawdown that it can go to, I think all 6 combination of all 6 is a better way to go. If your portfolio size is about 30 lakhs and more, you can subscribe to all 6, and probably you will get the kind of diversification you will get, and the kind of risk adjusted return you will get will be much better. Of course, choice lies with every individuals. Anything else you want to know, sir?
So, just out of curiosity, how much overlap would be there between all these 6 small cases? Would there be some common stocks also across
Yeah,
all?
there will be common stocks, and I tell you the logic of having some common stock across, because if I'm allowed to throw a name, I will throw a name called
Sure.
JBM Auto. Okay, so one of our small cases went long JBM Auto at around 430 levels. Okay, another portfolio went long around 530 level, and the third one went long around 630 level. So we generally try and average on the upside. That is what our philosophy is. But since you are having only one stock at 430, you will not average up. We don't have to use pyramiding in each small case. But by virtue of having multiple small cases, you will actually pyramid the stock on the upside. So you will actually write the winners pyramid stock on the upside. So it has got that benefit if some stock. And second benefit is like, suppose one portfolio is full and the other portfolio is not full, and some good signal comes to buy the stock, that will be picked up by the another small case. So there will be some common names, but there are benefits of these common names, and there will be unique names, and there will be, of course, overlap also.
Sure. And usually, in your experience of last 1 year, now that you have been on the platform for over a year and you have understood the entire system, and I believe you interact with a lot of investors. Just to share with all the investors, Compounding Wealth Advisors has been one of the fastest growing managers on our platform in the last 1 year. So, how have been your experience, and maybe if you can just help investors to know what is the frequency of rebalances and what is the importance of rebalances so that the investors should not miss out on rebalances.
So we can review a portfolio every weekend, like every Saturday we review it. We push the notification on Monday morning for rebalance, if any. If the markets are good and if markets are rising, there is generally no rebalance. But if market corrects, like how it corrected last month, so last month, like there was a hell lot of rebalance that happened. Several stock move out of the portfolio and new stocks have come into portfolio. So every week there is theoretically there is every week there is a rebalance, but practically speaking, if the markets are doing good, there may not be rebalance for months together in terms of if the stocks are rising, we keep on riding the winners, and we move the stock out only if it is falling. So by that logic, if there is a correction in the market, or suppose there is a bear phase in the market, there will be more rebalance. And suppose the markets are rising country, there will be less rebalance. But we review it every weekend.
Got it. So I have some questions live also. So maybe in the middle, I just thought to take those questions as well. Again, we have already discussed this, but this is a very big sentiment question which never leaves our mind every 5 years. Is it a good time to buy before elections?
Before elections. So usually between March 15 and election results, market rise by 5 to 10%. So yeah, it's a good idea to buy before, particularly when you expect the current government to continue. If you are expecting a regime change and you are expecting some uncertainty around, then probably it's not a good time to buy. But whatever surveys or whatever opinion polls that are happening, I think they are pointing towards continuation of government. So I think, yeah, you have next 2 months, good 2 months lying ahead of you. That is what my opinion is. I reserve the right to be wrong, and of course, disclaimer: you can uh, uh, check with your advisor and assess your own risk and take the decision. But I think I wish one should be invested before 31st March to ride the next bull run. That is what
Sure.
my
Uh, One of our investor, basically, he's very curious to study momentum of the stocks, and he's trying to ask, what are the indicators you analyze? Maybe if you can just help him understand maybe the top one, two, three, whatever, at least to
so
curb.
whenever I evaluate stock, uh, I look at price, I look at momentum, I look at momentum indicators, I look at trend indicators, and I look at volatility indicators. And the last one, I look at it relative strength. These are 4, 5, 6 things I keep on, and I look at multiple multi time frame analysis. I do like daily, weekly, monthly, and all that. And I'm a big fan of riding the trend and momentum. And relative strength is something very close to my heart. So yeah, we track momentum, we track trend, we track relative strength, and volatility indicators like ATR and all that we track, relative strength index, relative strength itself, and all this combination of everything makes, like, I track Bollinger Band as well. So a combination of that, all these are indicators and quantitative analysis that I do track a lot of patterns as well. So it's a combination of quants and trend and momentum and relative strength and all that. And yeah, I do track all of them.
Yeah, so Rakesh bhai, I think you had curated some very interesting data on one of the slides which I was just seeing. So if you can just walk us through some pointers that why is your view what you just shared with some data. I think you already have done a lot of
So I
work.
have lot many data. So you'll have to give me 5, 7 minutes. I'll just quickly zip
Yes.
through all the
That will
data,
just
and
give some flavor and some confidence in terms
I'll
of.
give you some big picture, like
Yes.
why am I
Yes.
bullish on the equity.
Yes.
So there are 12, 13 slides. Might take 5 to 10 minutes,
Yes. Yes.
but
Sure.
if you allow me that 10 minutes, I think it can change your
Please. Please.
perspective.
Please.
Yeah. So I'm sharing my screen, and the first disclaimer: investments are subject to market risk. Okay, so that is the disclaimer I want to put. And my introduction is already happened, so we'll not go to that slide. And disclaimer: this is the slide that I always harp on. Like, if you compound anything uh, 37 times, like 1%, 37 times, your 365 times, your capital is 37. And if you lose 1%, 365 times, your capital is 0.0. So the power of compounding something is very important. That's why it's important that you have a lot of time in the market. Let's look at the big picture. We start with mother market. Okay, see what mother market has delivered in last 200 over 200 years. Okay, US dollar, if you're holding US dollar, you are actually holding 4 cents to a dollar now. And if you're holding gold, it is $3.64. This is inflation adjusted returns of last 217 years. Stock has delivered 6.8%, bond has delivered 3.5, bill has delivered 2.6, gold has delivered 0.6. So gold bulls should understand that gold generally matches inflation, and it outperforms inflation by a margin of 0.6. That's about it. Nothing else. Okay. And if you're holding currency, then constantly you are depreciating. Okay. So the conclusion of this slide is like you should be in equities. 6.8% is the return of equities over 217 years. Okay. And your capital can be $1.6 million. And if you're holding gold, your capital will be $3.64, inflation adjusted. This data is inflation adjusted, right? Secondly, you see, why am I bullish on equities now? This is again a data right from 1928. Okay. 13 years of bear market, then approximately 17 years of bull market, another 13 years of bear market, another 20 years of bull market, another 13 years of bear market. And this bear market has broken in 2013, and we are barely 10 years. So another 5-6 years. You see, in between, these bottoms are made here, here, here. See what happens after these bottoms are made. Market rises further, it goes into bear, rises, goes into bear. This bottom is made, again rise. This is a corona bottom, okay? And the market has still started rising. And next 3-4 years, I think we'll have a secular bull run in the mother market. We are talking US, okay? And in between, you have generation lows like 1942, 1974, 2009 kind of low. Market gyrates definitely sometimes. And look at the Nifty's performance. Nifty goes into sideways for 11 years and then goes up by 4.5 times, five times in 4.5 years. Again, 5.5 years of degrowth, and again it rises. It did nothing for this time. Corona bottom made, now it is rising. So we are again, this is almost only 3.5 years. Another 3-4-5 years is not ruled out in terms of performance. Okay. Now this is a very important slide, Rakesh bhai. Ye Nifty 2001 se 2001 till today. Okay. From 2001 bottom, Nifty rose 6 times. Then it corrected. 2008 bottom made. From 2008 bottom, it rose 6 times. Okay. And it made a low of 7,500 in 2020. And you can imagine, if it rises 6 times from 7,500 levels, where can it go? So we expect Nifty to go to 45,000 by 2030. So we are currently 6-7 years away from this. These are the kind of data that we look at. Look at the India's population. 23% of the world population. This is a slide by Oak Tree, White Oak, sorry, Mr. Ashish Somaya, in one of his interviews of face to face with Vivek Bajaj, he presented this slide. This is India, okay? This working population of India. Look at China, look at Europe. Everybody is having an aging population, and we are having a population between 15 and 65, which is rising every day. So this will lead to a lot of productivity gains. A lot of 23% of working age population will be Indian by 2030. So this is where major production happens, major consumption happens, economy grows, and all that. And markets are slave to the earnings, right? Okay, all these earnings, all these years, like for how many years data is there, from 93 to 2023. Okay, almost 30 years of data. Earnings rose by 12%, 12.5%, nominal GDP growth by 12.5%, and Sensex also rose by 12%. So whenever there is a growth in GDP, Sensex earnings rises, and when Sensex earning rises, market also rises. Okay, this is making us further bullish, because current growth is around 7% and your inflation is around 6%, 13% growth, nominal growth. Then good companies will do better. You can, if you are a good stock picker, you will do further better. Okay, look at the corporate profit as a percentage of GDP. In 2007 up cycle, corporate profit as a percentage of GDP is 7.3%. Currently, we were in FY21, we were at 2.8. Currently, we are sitting at around 5.6%. 3.6%. Okay. So this also, whenever there is downturn in terms of earning as a percentage of GDP, market does not do well. I think we are an uptick cycle here also. Look at the returns of last 20 years. India has delivered 16%, Asia Pacific ex-Japan has delivered 12, emerging market 12, world market has delivered 11.2%. Okay, ये बिग पिक्चर है सर. तो ये बिग पिक्चर मुझे बोल रहा है कि भाई मार्केट तो बुलिश है. मार्केट कूल ऑफ क्यों? स्मॉल कैप मिड कैप ओवर एक्सुबरेंट थे. रेगुलेटर को उन्होंने थोड़ा कॉशनरी एडवाइस दे दिया. मार्केट्स वर लाइक करेक्टिंग. म्यूचुअल फंड टेस्ट टेस्ट हुआ. लिवरेज बुक आल्सो अनवाउंडेड. SME में there was a lot of fraud that also corrected, and recently there was a electoral bond controversy. Okay, what is the fundamental argument to rising of market? Like I said, FY24 earnings 975, 25, 1140. These are the expected earning. Even if you apply 22p, Nifty should be around 27,000 in next 1.5 years. Government is spending big time on infra defense. Multi-year breakout in realities happen. Productivity improvement, PSU, push on green energy, semiconductor industry. India's per capita income is just $2,200 compared to China, which is $5,400. Compared to US is like $65,000. So $3.7 trillion economy going to 18 trillion and then 27 trillion. There is only one side, that is upside. And this makes me super bullish. And I think I've given you helicopter view of why we think India will do well. If you have per capita income of 2,200 and your average age of India is 27, you're not going to be aging at least for the next 20 years. Productivity will increase, per capita increase hota hai, so disposable income, financialization of saving will happen. A lot of consumption pattern will change. So you are going to see next 20 years is what China was there in 1982. That phase will come to India from today onwards for the next 20 years. And that is why we should not look at this monthly corrections, 3 monthly sideways consolidation. You should keep on continuously investing. And of course, sector rotation and everything, you have to keep a close eye so that you can generate additional alpha.
Sure. And I think that is where your advice will really be handy. So one of the users who is still not invested in any of your small case is asking if I have to invest or start investing from today in one of your small case, of course, because of the capital limitations, what will be that one small case if the journey has to be started in your small cases?
So I think CWA All Caps 35 is where you can start. And why 35? Because there are 35 stocks and sector rotation has already started happening in that particular small case. And around 10, 15, 20% cash position is also there. And if the market rises further, sector rotation happens, the newer sector will come, newer stocks will come. And since you have got 35 stocks, you have adequate protection in terms of diversification and all. If you have to buy only one, it is CW All Caps 35. That is what we are recommending.
And I believe there will be a good amount of flavor of large caps also, which is the current.
Yes. But if somebody is risk averse and want to go only with large cap, I think large cap, CW large cap leaders will also do well this year. That's what our belief is.
Sure. So I think most of the questions I have already taken up, but still like, okay, there are a lot of clients actually where they are doing stocks specific and still not into small case yet. And because of that, I think the questions also have that flavor that PSU buy karne ka right time kaun sa hai. And that is where I think I would have given the answer, but I'm sure you are already there. So, and that is where I think the advisor is there, right? To take care of all that right time curve and all that, because there's no point in timing each and every stock. But yeah, please, if you can just help that investor, what exactly he should do.
So what is the exact question?
The question is that PSU correction, what are the right levels to buy after this correction, or will there be more correction, or should I buy now?
PSU, I'm looking at sideways to down consolidation for the next at least 1.5 months, 2 months.
Right.
And then probably you can look at it. Particularly in banking space, I think you should look at private banks more than PSU banks from this point onwards. So far, we were very bullish on PSUs, but now after this correction, I think sector rotation, private banks one should look at. Defense space and all, you can look at PSUs. But if you're looking at banking and all, I think you should look at private banks than PSU banks from this point of view.
Sure. And one more thing before I forget, and that is very, very important from the client's point of view, because there are two occasions. One is it's your first anniversary,
Yes, yes,
and
yes, yes.
because it's holy, so I'm sure everybody will expect some
Right.
kind of goodies or some kind of gesture from you
Yes,
as well. So it would
sure.
be great if you can share what all is there in store
So
for
as a gesture
new
to all
subscribers.
investors, yeah, as a gesture to all investors on the occasion of our anniversary, we reduced price of all small cases by 50% for a very limited period. So maybe the next week we will end this off. And for availing that offer, you'll have to use the code called CWA50. CWA50, that is the code you have to use. And that is just as a goodwill gesture. Otherwise, our products are very, very reasonably priced. And since it's a 1 year anniversary, we thought why not give an opportunity to people who have not invested so far and missed the journey of last year. So get on the board and reap the fruits of wealth creating journey that will happen over the next 2 decades. And believe me, like it's futile to time the market. I'm telling you. I've got last conversation. I think Rakeshji, we had shared a lot of slides which showed timing the market actually reduces the return. Don't try and time whatever disposable surplus you have, which you think you can afford, and unemotional capital kind of thing where you don't want to look at the price every day. Those kind of course, if you keep on investing in equities, and you have SIP option as well. You
Sure.
buy some now, add every month, and these are all free SIPs and all. They are not charged extra. Whatever subscription you pay, it's like one time 6 months, and then renewal after 6 months. In between, you can add funds, you can do SIP, and they are not charged at all. So they are all free from our side. Whatever transaction charges and at broker and at Smallcase and happens, of course, that will be there. But from our side, there is no charges.
So one of your
So
existing investor, Deepak Rai, he's asking, and maybe I can take a liberty to answer this. So Deepak is saying, I'm an existing subscriber. How can I take benefit of discount? So Deepak,
so you can
there are so many multiple small cases. So I'm sure you can get into some of the other small cases as well, and I'm sure you will be able to avail that discount as well.
so that is an opportunity for you to get into the small case. You are
Yes.
not there. Suppose you have bought Everest 10, then you can buy all caps 35. Suppose you already have all caps 35. Probably you look at CWA Mil 25, and maybe you can add large cap, because we are looking at large cap at a very keen eye this year, and I think large cap will outperform. So you can take advantage of that like this.
And this discount is more of a gesture, so don't get too much into it. It's just a very limited time till 31st March, I believe.
Yes,
So
yes,
I think there's a lot of more to be made than just this discount.
yeah.
So yeah, Deepak, you can always evaluate the other small cases as Rakesh just mentioned. So any closing remarks, Rakesh bhai, from your side before I close with some disclaimers and all that? But I would be really thankful if you can just share your closing remarks for people to take some action in the current market environment and just not sit on the sidelines, because usually what I've seen is clients or investors always miss out on both the things. So जब मार्केट ऊपर रहता है तो बोलता है जब मार्केट नीचे आएगा तब लेंगे, और जब मार्केट नीचे जाता तो वो बोलता नहीं नहीं ये तो बहुत नीचे जाने वाला है, एंड इट्स नेवर एंडिंग, दैट कॉन्वर्सेशन इज गोइंग नोवेयर. सो हाउ
So,
यू वांट टू डील विद दैट काइंड ऑफ
so
सिचुएशन?
पिछले एक अगस्त में मैं आई डिड वन पॉडकास्ट विद समबडी. तभी मार्केट कुछ 17,000 के आजू बाजू था, एंड पीपल वर एक्सपेक्टिंग मार्केट टू गो टू 16,000. इट नेवर वेंट देयर, एंड then the rest is history. It rose by 5,000 points. If you miss best 40 days in last 30 years, your return will be zero. So, and again, best days and worst days comes in clusters. So if you want to avoid the worst days, then your best day will also be avoided. So it's important that you become part of the market. Start at some point. If you're not comfortable at high valuation, maybe you allocate 30-40%, and then balance fund can be allocated via SIPs and all. But you have to start somewhere. You can't miss the next 2 decades that is coming to India. That will be the golden period, and that will uh, this will, I think, your generation and generation below us will be the most kind of rich generation in the next 20 years. So when you're looking at things from the perspective of 10, 15, 20 years, then क्या लगता है market में कल क्या होने वाला, and all this does not matter. Then also suppose it matters to you, we are giving manager update every weekend. Every Saturday we push the manager update, market outlook we give, and it is pushed via notification of a Smallcase. So you can, where we express a lot of views on international market, local market, gold, silver, and sector specific. Sometimes we express some view on the stocks as well. So those who are not a part of Smallcase but still want to take a pulse of the market can go through our market outlook newsletter and YouTube videos that we upload very regularly, and that is how you can probably keep in touch with us and keep on watching our, keep at least keep our small cases on your watch list. You will come to know the journey. At least if you are not invested currently, invest. If you still want to watch it. You will understand the behavior of the stock. You will understand the behavior of small cases and all. And do read our market updates also. That will keep you in the current touch of the market.
In fact, that was exactly one of the question of Srinivas, who is already an existing CWA investor since last 6 months and very happy with the performance,
Oh,
being a
thank you.
subscriber of your portfolio, of course.
Thank you so much.
I think he has just not checked. So, Mr. Srinivasan, I would suggest that if you really want to see the newsletter or the rationale behind every change, you should actually go on the app, and there is a section called Manager Updates. So there are some updates which are public updates, and there are some updates which are private, especially for you subscribers, where even the individual stocks are being discussed and the rationale behind that, because that is only available to subscribers. So people who have not subscribed and they want to know about the stocks rationale and all that, of course, they have to be subscribers. So please feel free to uh, check out that manager update section. And in case if you still have any doubt or any clarification, please reach out to us, and our team will be more than happy to help you on that particular section. In fact, there are a lot of videos as well of Mr. Rakesh Pujara on that manager update section. And as mentioned by Rakesh, he's already posting them, at least the overall market outlook and all that. He's very kind enough to post it on his LinkedIn handle, and he does YouTube videos very regularly. So I'm sure you can follow that as well. And in case you still have any queries, I'm sure the team at Smallcase and Rakesh Pujara's team, CWA team, is always available for resolving your concerns, doubts, if any, on the stocks or research, whatever may be your concerns as an investor. So great. I think, Rakesh, we had this great candid conversation, and that's the best part. When I talk to you, I don't have to prepare anything कि क्या पूछना है, क्या बोलना है, कुछ नहीं. I think it's just a very, very candid conversation, that what's there in the investor's mind have to be communicated to you, and you have that ground pulse, which is very great for all of our investors to connect with you, rather than throwing jargons and all that. I think that is what feedback which we always get when we do your session, that यार सुनते तो ऐसा लगता है यार बस सामने बैठ के किसी से बात कर रहे हैं. And I think that is the key, which I always keep on telling, because I meet a lot of money managers. तो बहुत लोग बोलते हैं अरे यार क्या करना चाहिए हमको और बिजनेस के लिए. तो I always keep on saying that return is one part of it, but what is more important is the communication, the engagement, that how well you connect with your investors, how well you address their anxieties, their concerns, and give them that confidence about the larger picture. And of course, at a detailing level, you are always there as an advisor. So I think that's great, and looking forward to have more such sessions. And I'm sure you are doing great on your YouTube channel as well of communicating
Definitely, and
with.
we'll be posting more videos to help our investors.
Sure, sure.
Education is something, awareness is something important. Whether they
Yes,
subscribe to my small case or not, that is not material.
yes,
What is material is they should participate in the
yes,
upcoming equity boom that is
yeah.
coming. And
And
I am the person who will not shy away from expressing opinions. If
yeah,
I have an opinion, I will definitely express that, and I back myself, and I back my analysis, and I have reserve the right to be wrong.
sure.
But at the same time, uh, uh, knowledge is something that should be spreaded, and that is why we have started Market Outlook. That is why I've started a lot of YouTube videos. Rakesh Pujara one is my channel. If your viewers want to subscribe, and we are going to come up with lot many videos in the coming months,
Sure.
which will keep them apprised of the current situation, current market, which will help them navigate. Because otherwise, what is the medium of communication with them? It's like hardly any, right?
And maybe in coming future, we have already started even manager connect on ground. So maybe so Rakesh Pujara is based out of Bombay. So at least to start with, we can always plan something in Bombay where we will meet a lot of our subscribers in person. And then based
Absolutely.
on the feedback and all that, we can always go multi-city as well. This
Sure,
is
sure.
one of the great.
I'll be more than happy. I
Yeah.
travel all over India,
Yes.
do a
Yes.
lot of events, a lot of
Yes.
webinars,
So
seminars I give.
a lot of
So I'll
clients
be
have given us
definitely.
great feedback about this kind of format where they came face to face with their managers and all that. So I'm sure we will plan something that as well. So just
Sure, sure, sure.
stay tuned in this space, and we will keep you posted in manager update section via push notifications, via WhatsApps and all that, and would be
Thank
more
you.
than happy to connect again. So with
Thank
this,
you.
signing off, and thanks a lot, Rakesh bhai, once again.
Thanks.
And
Thanks.
have a great weekend, everybody, and have a great Holi, safe Holi, and see you soon with one of our more managers and with some different perspectives, different outlooks, so that at least we have different perspectives. And of course, people will align with something or the other. As Rakesh bhai said, participation is more important. I think directionally we are there. It's just about having that confidence and just participating in the markets. Yeah.
Thank you. Thank you so much.
Thanks a lot, Rakesh bhai. Chalo. Take
Thanks,
care. Good
Piyush.
night.
Bye bye.